All right, 15.3. We're going to calculate depreciation expense using the straight line method, and we will adjust accumulated depreciation. Most businesses use several broad categories of assets in their operations. Cash and other assets expected to be exchanged for cash or consumed within a year are called current assets, and physical assets that will be used for a number of years in the operation of a business are called plant assets. A loss in the usefulness of a plant asset as a result of wear or obsolescence is called depreciation. To match revenue with the expenses used to earn the revenue, the cost of a plant asset must be expensed over the asset's useful life. The portion of a plant asset's cost that is transferred to an expense account in each fiscal period during that asset's useful life is called depreciation expense. Three factors are considered in calculating the annual amount of depreciation expense for a plant asset. They are original cost, salvage value, and useful life. So original cost, how much we paid for it. Salvage value, what it will be worth once we are done using it. And useful life is how long we will be using it. The original cost of a plant asset includes all costs paid to make the asset usable to a business. These costs include the price of the asset plus delivery and any necessary installation cost. An estimate of the amount that will be received for an asset at the time of its disposal is called its salvage value. Salvage value may also be referred to as residual value or scrap value. Since salvage value cannot be known when the asset is bought, it must be estimated. The period of time over which an asset contributes to the earnings of a business is called its useful life. The total amount of depreciation expense is distributed over the estimated useful life of a plant asset. Two factors affect the useful life of a plant asset: physical depreciation and functional depreciation. So physical is actually, will it hold up that long? Functional is, will it still do its intended purpose, or is there new technologies that will make it better and easier, those types of things. Recording an equal amount of depreciation expense for a plant asset in each year of its useful life is called the straight line method of depreciation. So we look at original cost minus the salvage value, and that equals our total depreciation expense. So here we have an asset that cost us $2,500. When we're done using it, we are going to assume it will be worth $500, which means we need to depreciate $2,000. Then we take the estimated depreciation divided by the years of useful life, and then we have our annual depreciation. So in this case, our depreciation expense was $2,000. We anticipate we'll use it for 5 years. So each year we will subtract $400 from that asset as depreciation. The total amount of depreciation expense that has been recorded since the purchase of a plant asset is called accumulated depreciation. So here we have accumulated depreciation in the second year and the third year. So By the end of the second year, we had accumulated $800. Remember, it was $400 a year. In the third year, we incurred another $400 of depreciation. So now the total depreciation on that asset after 3 years is $1,200. The original cost of a plant asset minus accumulated depreciation is called the book value of a plant asset. So we paid $2,500. After 3 years, it has depreciated $1,200. So its current book value is $1,300. So when we journalize this, you can see that we have a debit to office equipment, depreciation expense office equipment for $7,485. And then we have a credit to accumulated depreciation for office equipment of the same amount. And then we're going to depreciate our store equipment. So we debit depreciation expense, we credit accumulated depreciation. So here's our transactions: debiting depreciation expense, crediting accumulated depreciation. All right, that's 15.3. Next will be 15.3 work together.